Jake, Hashpower Academy. How are you doing today? Thanks for joining me.
Thank you for having me, Matt. It's an absolute pleasure to delve into some interesting sorts of details because I think, well, we initially started talking and I think there's two different worlds here. And I think, yeah, we can allude to that in the conversation. But yeah, thank you for having me.
Yeah, well, thank you very much for joining me. I was very keen to get you on. I think you're one of the best educators in the space. And given your kind of area of expertise in the mining sector within Bitcoin, I thought now was an interesting time to be discussing Bitcoin's market conditions. Are we going to have a lengthening cycle? Is it going to be a traditional 4-year cycle? So we can dive straight into that. Is there anything in particular you'd like me to load up as you kind of give your take on the current market and where you could see the next few months going for Bitcoin?
Well, past performance is not always an indication of future results, but there's also that conflicting statement of the trend is your friend until the end. And I think many people are looking for the question everyone looks for is what is the top? Where's it going to be? All these sorts of things, and then we can look at all these sorts of cycles that have happened. But I think the question becomes: are we going to have what is considered a 4-year cycle? Or to Bitcoin miners, the commodity cycle, the bull market is the rush of lots of income, and then the bear market is bear market building and struggles, or has the introduction of the ETFs and all these sorts of things, mass institutional demand, which the amount of buying per day is like 10 times the amount of Bitcoin that's being mined per day. The demand outpaces supply at a base level, but then also the price isn't having these, as Samson would allude to, an Omega candle or anything like that. So we're not seeing that same up. I don't know what to. I would say we're mid-cycle, but the statement I could boil it down to, but I think we can go into detail of, is I think Bitcoin's going to bore us to $1 million. I mean, up, sideways, flush the leverage, up, sideways, flush the leverage, or as we've just seen, the liquidation events across the crypto space as a whole, with masses of liquidations, even that. So looking at the past to indicate the future, what's happening most recently, and also that period of time that we're in as well, which is when people look at halving cycles and how many days since the halving has the peak been, and we're sort of coming to that point historically. But as the question becomes, is this cycle different? So yeah, I've just thrown out all different questions there, but I think we can use data to sort of anticipate what we think is going to happen. Yeah, especially with this one, that is there a diminishing returns aspect as the dollar value of the market cap size of Bitcoin going multi-trillion? Is that going to be something that slows down the pace of price going up and the full bottom to top, so to speak? But yeah, have you got any comments?
Well, I was wondering if there's any data points in particular you're looking towards to maybe give some insights into whether we are having a lengthening cycle. Because I'm kind of still in the camp of I think we're probably going to have a big blow off Q4 top.
Yeah.
But I am open to the idea that we do lengthen into 2026. I don't know if it's quite super cycle territory yet, but are there any data points that you're looking towards to kind of give some guidance on if we are in a lengthening cycle, when a peak may occur, or if we are just going to have this kind of step up boring sideways before explosive move price action continue indefinitely?
Well, we have the sell side being, we hope, constrained 21 million Bitcoin, half of it cold storage, lost, and not actively in markets, or even is it like 2 to 3 million is typically balance on exchanges, and how much futures / paper Bitcoin is out there, or dodgy dealings of exchanges, and those sorts of things limit how much is on the sell wall. The buy wall is infinite, technically. The amount of dollars, the needs of the US to expand debt to the rest of the world, and all these sorts of things. So the natural direction is always going to be up. There's no top to Bitcoin in dollar terms because there's no bottom to the dollar. But when it comes to the question of a super cycle, I would infer a super cycle as the halvings becoming insignificant as it continues maybe an uptrend beyond any form of cyclical going down, touching the production cost of Bitcoin, which is something we can go into detail on, which is when people refer to the 4-year cycle, the halving event for the Bitcoin space is well, to the Bitcoin space, it's the halving, but to miners, it's the doubling, which is their cost to produce a Bitcoin doubles to the next block. The 6.25 going down to 3.125, going down to 1.6, that doubles. Your energy bill stays the same, but the amount you mine is cut in half. So your cost to produce, how much you have to spend on electricity doubles. And what happens is, for the example of, I think it was a previous halving where the price crashed to 4,000, and the production cost that we knew when it was coming would have doubled miners' average cost to 8,000. And what did price do? It recovered from the COVID crash and hovered and consolidated at 8,000. So there is information asymmetry, which is those that delve into the financial aspects of Bitcoin, they miss out on the knowledge if they haven't delved into the deep details of the energy/mining side. The key example is if you have a mining machine and your energy bill is $200, your mining revenue is $400, you're producing Bitcoin at a 50% cost basis. So if the price was 100, you're producing at 50, that 2-to-1 ratio. But then you can take it to the network level, which is learning what all of the different miners out there in the world, rough efficiency, the amount of hash rate, all these sorts of things boiled together to create this sort of average cost to produce. And interestingly enough, it's quite close to the sort of realized cost for people to be buying Bitcoin. And I think mining is included that. Yeah, that is one of the closest things to the production cost. But the one thing that adds more detail on the mining side of things, when you look at production costs in mining terms, is those halvings, just immediate jump. But yeah, a super cycle, that would be more of a continuation as to what we saw. Just price. There's so many things to this. Another thing I'd probably add, which is that I'm talking about all this relationship of the 4-year cycle being Bitcoin price shooting way above the production cost and bouncing off of it. And in the future, if price continues at the rate it does, that sort of cited 30% annualized compound growth, that the network cannot grow at that same pace, which means that the physical cost to deploy more energy, all the infrastructure and the machines cannot sustain that continuation. In dollar terms, yeah, the price can go up, but production is not going to go up as much. So this opens a wider profit margin for miners continually over time, and the potential for Bitcoin to crash through that. But also we are seeing just that insatiable demand. We're coming up to the last 1 million Bitcoin to be mined.
I feel like the topic of miner profit margins widening going forward is an interesting one, because obviously we're seeing the block reward diminish, decreasing 50% every 4 years. And we're seemingly seeing on-chain activity also kind of taper off as we've changed narrative from a peer-to-peer currency to more of a store of value. So these profit margins widening for miners, could you kind of delve more into exactly where that is coming from, and if you think that trend is going to continue? Because in my mind, we'd require the Bitcoin price to double every 4 years for that to keep pace.
Yeah, if assume there's no fees and economic activity in blocks, then subsidy and fees combined make the block reward. The concerns of the lack of fee demand in Bitcoin blocks means that subsidy is the only income stream that miners can depend on as a baseline. I would add that miners are extending into becoming heating systems and all these other areas. They're not just limited to Bitcoin production as their only commodity. There's some miners in Texas generating 70% of their income from selling power and stabilizing the grid. There's other miners that take the old machines to make heating systems. So will we see this transition where maybe the price becomes really, well, it's still like 99%. Price drives 99% of miners' revenue, while subsidy is just the majority of revenue. Subsidy is a quantity of Bitcoin, and a quantity of Bitcoin has a price. Electrical bills, dollars. Mining machines, dollars. So as we go into this future of the network can't physically add hash rate at a quick pace at the same rate that price can continue, it's yeah, there's yeah, but the key thing there is price. If price continually drives the miner's revenue, as you've alluded to, if the amount that we earn is cut in half every 4 years, so we're earning a smaller quantity of Bitcoin as miners, but its dollar value is much higher, because miners, for Bitcoin price, it's the premium. So miners are getting their Bitcoin at the electron value, $60,000 of electricity to make $110,000, $20,000 Bitcoin. And the way that you can see that is actually similar to the way Michael Saylor, instead of the energy layer and the price, the energy layer and the fiat premium price of Bitcoin, you've got the treasury stocks, which are one step higher, which is you've got these shares, the treasury stocks, buying the Bitcoin price as their underlying value metric, or the net asset value of how much Bitcoin. Miners are one step down. They are producing at an even lower rate and capturing the Bitcoin price. And that would go to say that maybe in the future there is a treasury stock that can arbitrage the energy price of Bitcoin and take the premium fiat price on top. But where I'm trying to go with this is that difference between these two prices is an arbitrage between energy markets and financial markets. And that's not going anywhere. That's only going to grow. And like I said, if the amount that miners earn continues to be a pricing system where the cost to produce Bitcoin is also connected to the energy markets. So what we've historically seen right now, and especially in the last few years, is the large-scale miners, they'll switch off machines if the power is more profitable to sell to the grid. And what that does is act as a natural buyer, because if they're able to sell power at a more profitable rate than mining it, what are they going to want to do with those incomes? They're going to want to either buy Bitcoin or hold it as like an energy credit with the grid and consume that to produce even more Bitcoin, but they didn't have to pay the energy bill. So it's effectively buying Bitcoin through the energy bill. What that does, essentially, to anyone trying to understand price and where it can go, is the production floor becomes a natural intrinsic buy wall. So, and we've historically seen this, which is price in a 4-year cycle nature drops down to production, and you can think of price like a ball full of air, and the production floor is like the ocean of, well, energy liquidity, and you can't push the ball of air below production costs because it will just bounce straight back up. And yeah, the chart you're showing right there is the price bouncing off production. And it truly is that yeah, you can see the halving there. You can see how the COVID crash plunged. The COVID crash plunged into the production floor at that sort of 4,000-ish rate. But here's the thing: we knew when the halving was. 8,000 was going to be the new production floor, and people were wondering, why did Bitcoin recover from that crash so greatly in 2020 onwards? is because we knew where the new production floor is. Would a miner spend $5,000 today to buy Bitcoin, knowing that in a couple months it's going to be costing 8,000? It's a no-brainer. You buy it all the way up to 8,000, and then it, as you can see, it consolidated after the halving. So the key takeaway there is, by studying the energy and mining side of things, even if you're not delving into mining, they give you so much more information on the price side as well. Because as Elon Musk alluded to early this morning, that Bitcoin is an energy-based currency and you can't cheat energy. And if people are just learning about Bitcoin from its dollar price and the blockchain without studying its energy layers, you're staring at icebergs without knowing what's underneath. And yeah, we're talking about an energy-based planetary currency, and you have to study the energy side, and that's everything to do with the Hashpower Academy and what we teach. Yeah,
That's a very interesting way to put it. And I saw Elon's tweet, and I agree wholeheartedly that being able to commoditize energy and use that for decentralized peer-to-peer transactions is a amazing technology. I mean, we're obviously all into Bitcoin, we all agree on that, but the way he put it, I think, opened the eyes of a lot of potential future investors and a lot of people who may be unaware of what Bitcoin truly is. But interesting kind of comparison between the production cost and miners and treasury companies and their net asset value premium. Would you envision a future in where Bitcoin is kind of trading and gravitating towards that production cost, and maybe we don't get these big volatile spikes far above that? And this is what maybe is going to kill these traditional 4-year cycles that we have and create almost this long-term super cycle as the production cost continuously increases?
I think the production cost, well, the production cost is the farmer's rate of producing the good versus maybe that market rate that they want to sell it. So Bitcoin is the economic energy has been captured, proven, and brought into the digital world that has a monetary premium to it. And I think in this fiat world where, say, 2008 is the realization that we shouldn't have a monetary premium to real estate. And we're eventually going to learn that as that continues. What I'm trying to say there is, I think there will be an aspect of monetary premium to Bitcoin in of itself, but I see the convergence of the energy cost of Bitcoin and the price if we have no fees in here's the funny thing, if there's no transaction fees in block space and the halvings just drop us and drop us and drop us, production floor keeps raising and raising and raising. And so we reach a point where fees will take over from subsidy. And I think that is a tipping point that will give us the most information as to when that convergence, when Bitcoin price, but that's in dollars. The key thing I would say there is I think we converge into the full realization of Bitcoin being energy money is when it's exchanged both ways. And the scale for that is not in a dollar world. So that's way into the future where fees have become greater than subsidy. And then the economic activity within Bitcoin overrides its dollar pricing. Remember, subsidy is a quantity of Bitcoin. There's no economic activity. It's arguably monetary policy from Satoshi to distribute the full 21 million. Versus fees, which are economic activity of a fee was paid because a larger transaction of a good or service with money in the opposite direction. And so, when fees take over from subsidy, that's when economic activity in Bitcoin becomes its key driver of its value versus its dollar price. And so that it's sort of like, the whole aspect of there's no top to Bitcoin in dollar terms because there's no bottom. There's no top to Bitcoin in dollar terms because there's no bottom to the dollar. So you've got this fuel of fiat driving Bitcoin price, the engine of energy scale up with all this mining deployed everywhere. But that point where Bitcoin goes, don't need you anymore, Mr. Dollar, is going to be when, fees are more than subsidy. From there, I think it will make its path towards quote unquote price converging with production, but there'll still be some aspect of premium. But the nuanced aspect there is different machines have create a different production price. So there's more like a distribution, which is there'll be an average production cost and maybe Bitcoin floats around it. But that's going way in the deep end. Yeah.
Fair enough. So, interesting topic on the overlap of fee revenue to block subsidy revenue for miners, at that point being a major flippening within the Bitcoin ecosystem. But is it a concern for miners that fewer and fewer people are using Bitcoin on-chain? And this can kind of open the door into a big talking point at the minute in the node space, which is core versus not, and the potential for spam on chain. Although, as much as people hate it, that spam actually does bring revenue. And Bitcoin being a censorship resistant, decentralized monetary system, do you think that restricting what we can include in a monetary system is fair, or do you think that we should almost allow free market capitalism to come into the space to then provide additional revenue and security for Bitcoin miners and the network?
They take the example of hash cache and emails. It's just you can't prevent the spam, but having that way of it's not filtering it. It's a rabbit hole of a question, but the short answer solution is if the fee market was highly active with lots of transactions, we wouldn't be having this conversation really, or this question. So the fact that the fee market is quote unquote dead or even going below 1 Satoshi per VByte can be considered concerning, but it also right now drives the price up because again, if the less revenue miners earn, production cost goes up. That same production floor is what price bounces off. So does it accelerate the push for price in dollar terms to continue up? That's something people holding Bitcoin would appreciate. When it comes to the nodes, they are volunteers. And there is this fragmentation from the start of Bitcoin where people early on, they were mining, storing their own Bitcoin, and running a node, aka storing all the data of blocks. And those three roles fragmented into the mining industry, mining pools for nodes and wallets and hardware, hardware devices. So there was this sort of fragmentation of the three functions. And the mining aspect is the economic function, which justifies the imposed costs of more storage of data. The other side of that, you've got the fact that within consensus, we've already agreed the sort of amount of size per block of data coming through. So the rate of cost being imposed is sort of constant, arguably, relative against the cost to store data is getting exponentially cheaper. So you've got something that's sort of a linear cost, but exponential cost reduction. And the node runners are going to be holding Bitcoin, so they're going to be holding the asset, which gets repriced even against terabytes of data storage. When it comes to the future of all of this, I personally advocate for the path in which the three core areas of decentralized energy, decentralized data, and decentralized money have all three of them are using the blockchain for settling data. I'll give you an example because monetary data, that's what is consensually agreed across everyone. Let's start with what everyone can we agree that monetary data should be stored or financial data should be stored in the Bitcoin time chain? Yes. I believe in the future we should have energy systems, electrical grids that mining stabilizes, use the blockchain as its communication system for grid stability. The layer one as a settlement layer for the purchase and trade of energy, the most fundamental other commodity in Bitcoin. And then the data side of that being more the hash power side, communication system side of things. But yeah, I see the justified information in the blockchain being monetary, energy trade, because there's always the cybersecurity risk of grids being hacked and all these sorts of things. So if Bitcoin mining introduces what could be considered a lung capacity for the electrical grid, because computers deployed on the grid that can effectively breathe and the amount of power they use can help grid stability. If all of that can be through the Bitcoin blockchain, that creates that's stabilizing global grids. That is of, you know, when the grid goes down, there's like X amount of people that die for all manner of reasons. So we're removing those sorts of things. That sort of data should be stored in the chain. Now, when it comes to other questionable types of data going into the chain, it is that aspect of rabbit hole. For the miner, it's they paid the energy cost. Arguably, you could say they can put whatever they like into blocks. They paid the cost. They proved the work. But socially, you know, morally, what they put in the blocks, that becomes a query. I guess honestly, the push that I have is let's avoid this problem entirely by stimulating economic activity across all three paradigms of Bitcoin: the energy side, the compute data side, and the financial data side of things. If the fee market is active, it truly removes the issue, because the cost becomes unjustified.
I really enjoyed this. I think you gave some great insights, and I'm hoping we can do something again in the future. And just for anyone that has watched part 1 of this, part 2 will be over on Jake's channel. Is there anywhere you'd like to give a shout out and send the audience to?
The Hashpower Academy, which is an educational place to learn everything to do with Bitcoin, not just from the financial lens, the on-chain aspects, but going deeper into the energy layers of energy money, Bitcoin. And I have a free course on the website, hashpower.academy. And people also reach out to me for hosted mining, those sorts of things. People also reach out where they've got like a particular project that they want to do, like a heating system and stuff like that. And yeah, I've just got this sort of interchange of connections of all different places and people. That's on the educational side. Something that I've been building for several years, which essentially could be boiled down to a hash rate exchange, which is delving into Bitcoin mining being more accessible to the everyday person. And yeah, that'll be a topic for another day. Yeah.
Great. Well, thanks for all of that. Again, all links and everything will be in description. But again, thank you very much for coming. I'm hoping we can do this again in the future. And thank you all very much for watching, and I'll see you in the next one.